What's going on, my friends? Happy hump day. Last day of the second to last month of the year. It's November 30th. Whoa, Nelly. Crazy day today. The Fed. Holy smokes, team. You'd think that they said, you would think, based on the price action today, that Powell not only said we're going to slow down rate hikes, but you would think he would say we're going to slow down these rate hikes and we're going to start cutting them. That is how the market reacted today. The market was very, very happy. Very, very happy. So we're going to go through a bunch of stuff today. Haven't done a long form video in a while. Have a little bit of time here, so I'm going to get to as much as I can. There is a lot going on. The market has definitely picked up. Real estate has picked up. It has. Rates have dropped today. We saw 77 basis points. This is where I'm going to start. Things have picked up, not because of rates going down, though, because things started picking up before rates dropped. There's pent-up demand. And right now, a lot of sellers, because they're not in desperate situations, are just not on the market. They see the market's weak. They're not coming on the market. A lot of the stuff that's out there, there's not as much inventory as we need, and the stuff that's out there ain't great. Hate to say it, but seeing lots of cancellations, inspection issues, a lot of stuff like that going on. So 77 basis points today. What is that? Approximately 0.25% in rate, which we did see the majority of that, even though it's just one day. Look at that beauty right there. Huh? What have we been telling you? What have I been telling you? This was coming. And the thing about technical analysis, or TA, is that it always does. You say, oh, well, you couldn't have predicted the news. True. But the news tends to coincide with the analysis. Isn't that interesting? And so now we have this channel here that we've been watching for a while. I've been saying, hey, this looks good. This looks good. This looks good. I'm expecting, higher bond prices. And there's our first big greenie. Now, we're going to talk about why this is the case. We're going to talk more about what the Fed is doing. And we'll go through several different things. I'm going to actually pull up interest rates today. We're going to look at interest rates. Where are they right now for certain scenarios? And we're also going to look at a few other things like the heat map. I mean, look at the S&P today. Dang. As good as it gets right there. Huh? Greenage everywhere. And so it's always weird to me when the stock market rallies and the bond market rallies. It just shows you how broken it all is. They really should be more inverse, but this bond market's been oversold. The stock market's been oversold on a short-term basis, at least. And so you see these rallies. Now, I do believe we're going to continue to see rates drop. I don't know how much or how long it will take us to get there, but I think we're going to see this trend change. And this is the reason why. And that's what Jerry Powell gave us today. So I go over this every day on my reels. I'm making reels every day, showing this, what's going on, how I'm analyzing it. Remember the last couple of days we were red and I said, don't worry about it. We're in the channel. We're good. And today, Fed Chair Powell says smaller rate hikes. Smaller rate hikes since the market's going bananas. Smaller rate hikes meaning, hey, the worst is officially behind us. Now, we were talking about inflation. The worst inflation is potentially behind us. I mistakenly expected that to be the bottom, because you would think, hey, if the worst of inflation seems to be behind us, but no, the markets are almost entirely, completely controlled by the Fed. By the way, we're live on Facebook, multiple pages, groups, LinkedIn, YouTube, Twitter. If you want to drop a comment and want to say hi, what's up, Michael? We live. You can do that or ask a question. Happy to help there. So he says, well, we're going to hike smaller. It's weird because we're still hiking, right? We're still hiking, but we're going to hike smaller. Not we're going to cut. Not we're going to stop hiking. We're going to cut smaller. But why is that so important? Because it signals the transition. It signals the beginning of the transition towards no hikes. Markets are always trying to predict about 6 months in advance. Always trying to predict out in the future. Always trying to bet on what's going to be in the future. So when you look at stuff like this, you go, oh, well, that's the reason why the market rally because they're expecting, over this next 6 months that you're going to see this dwindle down, maybe go away, maybe even see some stimulus. Ooh, the market would just roar like crazy if that happened. So basically says, hey, starting December, Looks like we're going to hike less. Maybe it's only 50 basis points, like literally not that much less, but it signals the turning point. And that's the key. We now have a defined, today was it, a defined turning point. And look at this. Some of you may have seen this. Let me see if I can actually pull this up. I posted this. There is a congressman who bought, and tell me he doesn't know this. Congressman who bought, yeah, there it is. Okay. Let's see. There's a way for me to pull this up. I'm going to pull it up over there to you. Okay, this might get me there. Yeah, let's do this. There's a congressman. I posted this on Facebook. Congressman Representative Alan Lowenthal purchased over $50 million in Treasury bonds on November 8th. Now, I'm not looking at the Treasury market, but the bond markets are pretty much in lockstep. November 8th was, you guessed it. Let's see. Right here. How do I get my trigger back on? November 1, 2, 3, 4, 5, 6, 7. Boom. Look at that. Like the man knew what was going on. So huge move, right? Now, do you think that's the end of it? Or do you think that's just the beginning? I don't know. This dude put 50 mil down. Is a congressman. 50 mil. $50 million. How bananas is that? Over 50 million, actually, it says. I just got that for the first time. Over 50 million. How bananas is that? It also shows that it's in his IRA. Must be nice, sir. Maturity date was May. And so what I was saying in this post was, this congressman knows something, obviously knows, probably has an idea what the Fed's going to do, may know other things too. He was trading other stuff, but you see there's much smaller amounts, way smaller, 50,000 at the most, not a 50 million, over 50 million, over 50 million. Some people said, oh, well, he's just looking to get his 4-something%, park his cash there. No. You don't place a bet that big just parking cash, guys. That is not how it works. For sure know something, and look at the appreciation in bonds. You can make a fortune on bond appreciation. Remember, when you buy a bond, you buy it for a price. You're guaranteed to get a yield, okay, and you get paid back 100 for that bond at the maturity date. But you also, if you buy it at 96, you're going to get paid back 100. That's not bad, right? So you have different. There's when you're buying bonds, usually you're doing it for the yield, but sometimes you're doing it for the appreciation, and you can make both. You can make yield while you make appreciation, which is pretty great. So the closer you get to maturity, the closer these bonds will trade to 100, because obviously that's how much they're going to be worth. It's predetermined. So it gets pretty interesting when you look at people who have inside information trading bonds and making all this money. Anyway, so that happened. And so when I saw that over the weekend, it's like, okay, all the confirmation I need, people who know more than me, people who are way more dialed in, are buying the heck out of bonds. That's a great sign. Also, this is the Dixie. Now, Dixie is the dollar index, the DXY. And remember, we've been tracking this from the very beginning. This was the date right here, the red arrow. That is the date of the last rate hike. Now, in previous rate hikes, we saw the Dixie, which is a dollar index, show a lot of strength, as it should. As rates go up, that strengthens the dollar. The Dixie should go higher. This time we got 1-2 days of green, and then an absolutely bearish engulfing candle here, which just took out those highs. It was in lockstep, though, with this channel, which we had already plotted. Notice that it also came down here to the support area, touched the channel, and now it is right in that same place again. So the Dixie's at support. Now, of course, it could just melt through this. Totally possible, especially if Wall Street's really playing the Fed here, then they could just absolutely nuke this. This could absolutely nuke. But it's at support. And if we look at the S&P, it's also right at that 702 resistance on the Fibonacci. And remember our bearish horn, the top portion of the bearish horn. So it looks like we might get some rejection tomorrow. Now, again, this don't mean anything. It's entirely possible these things just melt right through these things, especially when the Fed is involved. And if we're really trading the Fed, all bets are off. I mean, it's just craziness, as you saw today. I mean, look at that candle. That's bananas. The S&P was up 120 2.5 points today. That's crazy. That's a massive, massive day. 3%. But it does look like we're scheduled for a pullback here. So the big question will be, how do bonds react? Are bonds going to continue to be in lockstep with stocks? We'll find out. Okay, so that's what Jerry said. That was the big deal. Elon Musk says the Fed must cut rates immediately. So we're going to talk about some of the stuff. We've seen there's definitely some reports out there about layoffs and things that you're starting to see that, hey, this place is cutting jobs, Amazon is shutting jobs, this place is cutting jobs, that place is cutting jobs. That's definitely happening out there. There's no question about it. But it's not like massive. When you look at the payroll numbers and everything that came in, like the first thing I noticed today was we looked at the data that came in today and everything looked better really than expected. The employment report, not necessarily, but real GDP, higher than expected, higher than consensus, higher than previous. Real gross domestic product, this one came in positive versus negative. The real GDP, SAR, domestic final sales, also higher. Trade goods deficit was pretty much the same, a little bit worse. Chicago PMI, that came in really low. That was the one thing that was a little bit of a head turner. Job openings dipped a little bit. Quits right where expected. Pending home sales, a lot lower, not as bad as expected by quite a bit. So I saw those things and I'm like, wow, okay. And then, of course, Jerome Powell spoke 10:30 Pacific, and the market went bananas. So that was kind of what happened today. Although, only reason I say Musk is saying this because he's plugged into a lot of different economies. There's a lot of different businesses, retail-oriented stuff. Very smart guy, obviously. And he's saying, hey, we might have problems here if the Fed doesn't stop what they're doing. The Fed is essentially trying to manufacture deflation by increasing interest rates and just sort of hurting the market. And that's how you fix it. And if you're doing it from a managed perspective versus a natural perspective or an organic perspective, just letting it happen, then yeah, you're going to have, people are going to have someone to point the finger. You can't just say, oh, well, the market's bad. You say, no, the Fed is doing this wrong. It's exactly what you've been hearing from me. And so he's got a point, but the fact that this same day, now that was at 7:35 Eastern, same day the Fed says, hey, we're going to turn around a little bit. Amazon, record sales over the holiday shopping weekend. One of the things that comes with inflation, right? People have a lot of money. There's a lot more money out there, a lot more money in the room. And so so far, this has not been, what's up, Giuseppe, JR, good to see you, brother. It's not as bad as it could be if we didn't have such, remember the record household wealth going into this recession. We got that report. Like literally month 2, I think it was February or March this year, we hit a record household wealth figure. And that's net worth wise. And so that is a huge backstop to help protect ultimately the economy, businesses, jobs, whole shebang, everything. And so this is just sort of one of the results of that. You say, oh, well, things are getting a little bit worse. There's some layoffs here and there. Markets are down. Crypto's crushed. We can take a look at Bitcoin quick before we go to the next one. This is a very, very good daily candle for Bitcoin, and got through a couple important points of resistance here. 21-day EMA, 236 Fibonacci, which had some, that was a tough inflection point there. So just kind of knife right through that today, and that's very, very helpful. I think Bitcoin is going to get frothy around 18.5, 18.4, somewhere in there. That's a pretty good place I expect rejection from. But if it makes it that high, we'll see. You never know. But back up into the 17s for Bitcoin after, the whole FTX fallout, which is absolute bananas, crazy fraud. Absolutely crazy. Talking about, can you say it more like normal? I don't know. Stream or show interference. Sorry, brother. Yeah, I just talk the way I talk. If you don't understand it, that's okay. Ask me a more specific question, and I'm happy to try to explain it to you. Job openings fell in October, but Fed efforts to cool labor market. So there it is, right in a plane of day. Hey, Fed is trying to cool labor market. Why? Well, if you need deflation, you need prices to go down. If you need prices to go down, you need to sort of like kill jobs, right? And that's sad. And so instead of letting the natural market do this, because the Fed's propped us up, now they have to knock it down. It's their own bed they've made, and they have to lie in it. I did think this was interesting. Mortgage rates fell for a third straight week, but demand drops further. This is the demand, the mortgage application thing, that is a lagging deal. What's the program that you use? This is StreamYard. So the demand is lagging. Expect that number to change in the next week or two as the lagging data comes in, and you see that there's a lot more people interested in the market for sure. Okay, let's do, guys, want to pull up some, let's pull some rates. Let's look at mortgage rates. Right now is a good time to do it. And we haven't done this in a while. And I always want complete transparency for everybody. Relocked a couple rates today, negotiated one. People who are already in escrow. That's one of the nice things about being a broker. I've been on both sides of the aisle. Brokering is better. Sorry, guys. Sorry for everyone who's just constantly hating on that. All right, we're going to use 780 credit here. We'll start with conventional. Why not? We'll do conforming balance. New loan limits increased, by the way. I can pull that up and show you as well on this. Got loan limit increases, which we were expecting loan limits to go up, of course. Let's see here. What is the easiest way for me to show that? Let's do it this way. Let's pull this over real quick. So conforming loan limits, so that's going to be everywhere, every county in the United States, conforming loans. You go to 726,200. That's really, really big for Riverside County. If you're looking in Temecula, Murrieta, you have a new conforming limit, 726,200. Now for FHA, we don't know what the 2023 FHA limit will be up there yet, but we know there's no high balance limits up there. So that's a big deal. Then I give you the multiple units here for 2 units, 3 units, 4 units, maximum loan amounts, and then the high balance limits. San Diego County, 977,500. Orange County's higher. Los Angeles County's higher. Ventura County's a little bit lower. Santa Barbara a little bit lower than that. And so we have loan limit increases. So this is going to allow people to put less money down on higher purchase prices. That's helpful. That's helpful. It's due. The things have definitely gone up. It makes sense for this to be the case. Let's see if I got logged in here. Okay. So now let's check this. So 570. This is going to be, we're going to do detached. We're going to do 780 credit. Primary residence, San Diego County. No lender fees. Okay. No lender fees. No points. Let's see what the conventional rate looks like here. Minimum down payment. So if you're putting more money down, like you're putting 20%, 25%, 30, 40, 50%, your rates could be lower than this. But I always like to kind of balance out when I'm quoting. Here we go. So UWM's got a 5.99% for you right there with the lender credit. Look at that. You get 5.99% on a conventional and get $2,100 towards closing costs. Kaboom. Oh man, I gotta get something in on this. Hiya. That's what I'm talking about. Let's get into the fives, baby. Knew this was coming. Been calling it for weeks and weeks and weeks. It's just the beginning. All right, so now let's look at high balance. Let's take it up a notch. High balance. So what we're going to need to do for that is we're going to need to go 800 down to 760 loan. Oh, did it erase everything? On that loan sifter. Help a brother out. By the way, 5% down conventional loan, you can waive escrows. You do not have to impound escrows. Ay, caramba. You do not have to impound escrows. That is one of the lies that they've been telling everyone for all these years. Same thing with VA loan. Getting a VA loan, 100% loan, you can waive escrows. You do not have to escrow. A lot of these banks out there force you to do it. You do not have to. It's not in my world. Okay. I would definitely take UWM in this case over residential. No offense to the team over there at Resi, but you got 6.5. Okay, so 6.5, high balance, conventional, with a small lender credit right there. No points. Beautiful. All right. That is conventional. Let's do VA. Credit. We're going to do detached. Let's do 600. No down payment. We'll do no down payment. So 600,000. No lender fees. See where we're at. This is going to be the fives for sure. What you got? What you got? 5.5. Look at that. Now, if you have a condo, you know, this is we're doing these all in detached with 780 credit. If you have a condo or something, you know, it could be a little bit higher, but 5.5%, 1,500 lender credit. Thank you. Thank you very much. So as you can see, rates have come down nicely. This is a beautiful thing. And I'm going to follow up with everyone tomorrow. If you are pre-approved with me, you're going to hear from me tomorrow. All right, let's see. Let me just go up here and modify. And now let's do high balance. So let's go 800,000. Ah. 800,000. No lender fees. No points, no crap, no junk. Let's keep it simple for the people. Ah, very, very nice. Right on the money. 5.5% as well on the VA high balance. Would you look at that? How about that? Usually the VA high balance, so you go above the conforming loan limit, is a little bit higher rate, an eighth, sometimes a quarter. Same, 5.5. So right now, 5.5% team on, you know what? Let's for fun. Let's do this. So 5.5% at 780 credit. Let's check 640. What's 640 credit look like? What's the difference? And maybe this is where that delta is, because usually, I mean, typically, you're going to see rates be pretty much the same for VA 640 and higher. And here's what it is: you're getting a little bit more risk-based pricing. But 640 credit, you're still at 5.875 with no points. And really, I would take 575 here for just a few $100. That would make all the sense in the world. Sometimes there's really good deals like that in there. You can see really all the way down to 5.5 is a pretty darn good deal. Only $2,000. I mean, you're probably going to make that up pretty quick on a high balance VA loan. So the rates are really, really, really nice. And this is by the way, this is high balance 640 credit. Whoa, what was that? Dude, I don't even know what happened. I think I did something I don't know how to do. Like one of those shortcuts with the Apple mouse, you like triple click or swipe it with 3 fingers and something happens, you know, that kind of thing. Okay, let's look at FHA. And then we'll call it a day. How about that? And while I'm pulling this up, just remember you can contact me anytime. Call, text, shoot me an email. We do not charge points. We will hook you up. Make sure you're getting a good deal on a home loan. That's what we do. All right, 3.5%. Let's see, that'd be 21,579. You can call, text, email. I also get you a loan quote. A lot of people just want quotes without necessarily having to pull credit. That's okay. You know, if you know what your credit score is already, we'll just use that and plug it in. It's easy. You see me doing it right here. It's not hard to do. All right, so let's pull this up. This is conforming balance FHA. Yep, 5.5%. It's usually the same as VA. Sometimes the FHA has been better though. 5.5% with a nice lender credit today. That's pretty, isn't it? Yeah. You go down to 5.375 with a small cost. That's FHA. Now we're going to go ahead and do high balance FHA. See my math skills. Okay, so 800,000 was 3.5% of 800,000. Let's see, 24, 28, 772. Minimum down payment, 3.5%. So the minimum down payment on this high balance FHA Yep, 5.5. So 5.5%. That's not too shabby. Wait a minute. Did I? Let me just make sure. Okay, I didn't. I just wanted to make sure I changed the credit score back to 780. So that's 780 credit. So if credit scores are lower, rates might be a little lower in this. If you're getting a condo, your rates might be a little bit higher than this. But if you're putting more money down, your rates could be better than this. So I'm trying to find kind of a middle ground to quote. I don't like the fact that most of the industry just quotes the best possible interest rate. I feel like it's just like, I don't know, deceiving. Control scroll mouse. Thanks, Mantis. Thank you for the help. I appreciate it. Okay, so that's what rates look like today. Jerry Powell sent the markets soaring today. Like if you look at the S&P, I don't know, just like a 15-minute chart. Look at what happened today. That's the day right there. This is Jerry Powell speaking. I mean, bananas. Now, when you see stuff like that, it always makes you think, okay, well, there's a lot of room for that to fall. There is, right? Like a retrace down to here makes sense. Like you could lose 50 points on that. And you're still up quite a bit considering. But I don't know. We'll see what happens tomorrow. I'm pretty optimistic about this chart. That's for sure. And, mortgage rates moving to a lower place than they are right now. But you never know. It's financial markets. Anything can happen. Here's the one thing that you know for sure. I got you covered. If you want to get a home loan with no points, no BS, good communication and availability, call, text, shoot me an email. I will be here. I will hook you up like a tow truck and we'll have some fun along the way. Tell your friends, rates are going down. If you're a buyer out there and trying to negotiate on a deal, better do it. Better do it. Already seeing multiple offers, losing out, losing negotiating power. Strike while the iron's hot. See you guys soon. Okay.